Binance has become one of the biggest, if not the biggest, stories recently. So Binance, along with Aptos Labs and Jump Crypto, are among the prominent crypto companies that are participating in a Binance-led Industry Recovery Initiative, which is now at about $2 billion. And joining us now to discuss this is Patrick Hillmann, Chief Strategy Officer at crypto exchange Binance. Welcome back to the show, Patrick. So just before we get into sort of the details here, I just want to make sure we have sort of the facts straight about the Industry Recovery Initiative. So my understanding is that Binance is allocating $2 billion, right? It was first $1 billion and then another billion, and it's all in BUSD, which is a stable coin. Is that correct? And there are some other partners as well, but Binance itself is responsible for about $2 billion of these dollars.
So we've committed to an initial guaranteed of $1 billion with the possibility of ratcheting up to $2 billion, in the coming year. Again, all of this really depends on, finding those right projects, which really fall into three categories. It's projects that have really good utility that's very unique. It's projects that have founders that have a good grasp of risk control, and it's projects that we think, or the rest of the industry believes, has a long-term sort of vision, plan, and viability in the marketplace. They're just going through some initial sort of growing pains when you're a small startup in a bear market like this. These are the projects that are going to eventually, potentially disrupt this industry in ways we possibly don't quite understand yet, and we want to make sure that they aren't snuffed out in their infancy.
So just to be clear, though, because there's been a lot of confusion about this point. So when Binance gives this money, the $2 billion has basically been set aside. It hasn't been deployed yet, right? We haven't actually seen it gone to these projects yet. This is just the amount allocated. And does Binance get anything in return? I know that you guys have said that this isn't an investment vehicle. So is it basically just aid, just a donation? Okay, here's money, no strings attached whatsoever. Just take this money and do your thing. Or is there any kind of return or any sort of anything that Binance gets in return for making this, very large investment?
Well, it really all depends on the project and what the sort of negotiated deal is. Some of these may involve, getting access to a number of their tokens or making a small enterprise investment in these projects. Some may just be a complete sort of regular bailout. It really kind of depends on what the project is and what the rest of our investment partners are kind of looking for out of bringing that project into this new fund.
So, Patrick, explain this to me like the idiot that I am. Where did the $2 billion come from?
So Binance has a pretty significant reserve for its own corporate sort of money, right? Going back to the Sam Bankman-Fried issue. An exchange is actually a pretty simple business. You hold assets in custody, and then you make money off trading fees. Binance is obviously much larger than just our exchange. We also have an NFT platform. We have a fan token platform. We have our VC fund, Binance Labs, which is one of the most profitable VC funds in history. And when you make money off of those trading fees, off NFT sales, off of our investments, through our VC Binance Labs, you take that money out and you create a separate ledger, and that becomes your corporate reserves versus your custody reserves. So this money comes out of our corporate reserves, not our custody reserves, which is at the very crux of the FTX implosion.
How much of that corporate reserves, how big are those corporate reserves that Binance has that it could throw around $2 billion on something like this? How much of its corporate reserves are being taken out?
It's actually a very small percentage. Binance is very different than other companies. It's very different than other companies I've worked for. Prior to joining Binance, I worked at General Electric. I was at one of the largest PR firms in the world where I was there. Head of global crisis, Hillmann. We don't spend money on things. And what do I mean by that? There are no yachts. There are no mansions being handed out at Binance. As a matter of fact, I just tweeted it earlier today. My last trip to our corporate regional HQ in Paris, I stayed at a Citadines, $83 a night. That's just kind of the type of corporate culture that CZ has kind of built to the company. It's one of thrift and one of saving to ensure that the company has enough reserves built up that even if every single cryptocurrency went down to zero or down to $1, and everyone pulled out their Bitcoins, pulled out their Solana tokens, pulled out their BNB, et cetera. And we had no more trading fees coming in. The company needs to be able to continue to sort of grow and expand into other areas of Web3 for at least 5 years without having that revenue. And so the reserves that CZ has built up is quite large.
I mean, it would be incredibly large because if you consider like some of the S&P 500 companies that are out there, you look at the top 10, right? You're only talking about 30 billion or so in their cash hoards. So for this to be a small percentage, I mean, you're assuming that Binance has tens and tens of billions of dollars out there in its cash hoard is kind of what you're implying here, in which case it would be one of the largest companies in the world. I mean, it's sort of, I'm sort of trying to figure out where the source of this money comes from. I'm not saying that you're commingling assets or anything like that, but it just, how much does Binance really have to risk on assets at a time when the markets when nobody wants to touch them?
Yeah, again, it's very clear. I think I laid it out here. Look at Binance. From a volume standpoint, right? Let's just look at our exchange. We are larger than New York Stock Exchange, the London Stock Exchange, and I think almost the Tokyo Stock Exchange combined. And again, we don't spend money on Super Bowl ads. We don't spend money on some of these more flashy items. So the corporate reserves are very healthy. And again, just looking at our VC fund, you have a multiple billion-dollar return just on our VC fund and the investments that we've made. The other thing that Binance is really smart about, at least what I encountered when I joined the company, is in the words of a famous philosopher, we don't get high on our own supply. We have a very sort of risk-averse strategy in pulling out assets that we have in the marketplace and moving them into BUSD. The entire decision to make BUSD, to form that partnership with Paxos, was to ensure that we had access to a stablecoin that we knew we would have complete transparency, not only into that stablecoin through regularly and periodic audits of it, which BUSD provides on a regular basis to us. But we also have a relationship with Paxos. We know that they're not also making risky investments with other companies outside of their ecosystem, which limits contagion risk for us. And so we're a very stable company, and we will continue to be so regardless of this ongoing bear market.
So Patrick, another I suppose, way to alleviate the concerns of folks out there is this idea of releasing proof of reserves. Binance has released a version of their own proof of reserves, but Kraken's Jesse Powell was tweeting the other day, so I'm sorry, but no, this is not proof of reserves. This is either ignorance or intentional misrepresentation. The Merkle tree is just hand-wavy BS without an auditor to make sure you didn't include accounts with negative balances. The statement of assets is pointless without liabilities. Your take on his comments there?
Yeah, I think Jesse was actually responding to a tweet and not to the actual statement that we put out, the blog article. Because in our blog article, we were pretty clear that this was just the very first step, and it will be a multi-step process, including bringing in a third-party auditor as well, which we've just announced yesterday. So it takes time to go and be able to conduct an audit of the scope and scale that is required at Binance, again, because of our size. However, Binance has, one-to-one custody. We're quite confident in our reserves. That's why we brought in a big name as an auditor to go through. We're quite confident we're going to have a good outcome. And as we work towards, not only building that audit, that proof of custody, also working, on the Merkle tree analysis, so we also have an ironclad proof of liabilities. I mean, listen, in the end, the marketplace is going to mandate this. That's it. There's no ifs, ands, or buts about it. And frankly, it should have been mandated prior to this. And we've even come forward and said that, frankly, we're a little bit embarrassed we hadn't done it prior. We should have seen this coming a long time ago, and now we're playing catch up. But we're going to do what's required of us, because if we don't think our business or any other business is going to survive if they don't provide that clarity.
Sure. And in the wake of the FTX collapse, lawmakers are also zooming into crypto exchanges. In the United States, at least, Senate Finance Committee Chair Ron Wyden recently sent 6 letters, including one to Binance US, questioning your customer protection practice. And I guess on another angle, part of the collapse of FTX was their native token, FTT. Binance has BNB. And, in terms of using it as collateral or shoring up balance sheets, what if the same thing happened to BNB in the sense that, FTT just lost incredible value in a short amount of time? What if that happened to BNB?
So two things here. Number one, we don't use BNB for any collateralization or to take out any debt. Matter of fact, Binance has virtually zero debt, period. We have no other external investors. We don't take out large loans. We have very simple business strategies, very simple business agreements. So we don't have that issue. Secondly, BNB is not FTT. BNB was moved out of being a Binance exchange token and evolved into becoming an on-chain token for the BNB chain, which provides, a lot more true utility and liquidity in the marketplace with BNB, which creates a much more robust field of wallets. So the chance of, BNB kind of imploding like FTT is virtually zero. However, even if, let's say it did, again, this is the reason why Binance frequently and oftentimes is converting our own sort of BNB holdings that we have to BUSD to ensure that we have, a completely sort of risk modeled, strategy to ensure that if BNB or any other cryptocurrency again went down to $1, it wouldn't impact our ability to continue to do business, and it wouldn't impact our ability to continue to provide those custody assets to users if they want to pull them off the market. It's a very simple business model, but that's what exchanges should be.
So I've got to ask, of course, now you have BUSD. Are all BUSD backed by, is it each and every single BUSD administered by Paxos? Or are there any other types that Paxos might not have access to?
You'd have to talk to Paxos, but no, every single BUSD is issued and managed by Paxos.
Okay, so that's $22 billion in BUSD. How much of the BUSD is how much of Binance's reserves are in BUSD?
We don't share that, but it is the vast majority of our corporate reserves.
So of that $22 billion, it might be that most, assuming that $2 billion is a fraction of the total reserves, one can almost assume that total reserves might be in the tens of billions of dollars. Where exactly, though, is Binance? Because ultimately, this issue of jurisdiction has come up, and if it's a company with billions of dollars, tens of billions of dollars on hand to slosh around, the issue of jurisdiction comes up, and it's been coming up, of course, with FTX. Where exactly is Binance?
Yeah, actually, I don't really understand this confusion. Where's my old firm, General Electric, headquartered? Is it headquartered in Connecticut, Boston, or is it where it's incorporated in Delaware? Listen, we have a corporate governance structure much like any other global entity. We have incorporated entities in the Grand Caymans, which we've discussed in the past. But when you look at how we're regulated, where we pursue licenses, it's really important we have those physical locations that are set up. So we have major offices in Paris and in Dubai, which we would call our regional hubs, which I think other organizations like an Amazon would call regional headquarters. And that is where we are filing our paperwork out to obtain those licenses, to ensure that we're able to meet those regulatory demands from those jurisdictions. And so, our footprint is pretty simple when you compare it to other global corporations. And in fact, I think a certain opposition force has used that sort of as a whip to try and paint us in a light that's just not entirely accurate.
Patrick, real quick, because we're running out of time, but I just want to get one last question. And you just said that Binance was bigger than 3 major stock exchanges combined. Is there the risk that Binance is becoming too big?
It's interesting. It's a question we've actually talked about. And we think the answer is no, and here's why. And this is going to be weird coming from a centralized exchange, but CZ has said it. We firmly believe that the crypto industry is going to continue to evolve towards true decentralization. It's what the tech was invented for. It's the most exciting part about the tech, and it's where the tech, I think, shows the most obvious sort of opportunities for the global economy and for the average user. And so, CEXs are going to continue to have a role to play over the next decade, but CZ has been real clear. He said it on multiple occasions that there's a good chance that Binance might not even have an exchange in 10 years from now, because again, we foresee that DeFi is going to continue to move towards greater adoption and will eventually reign supreme. And that's okay. There will always be a demand for CEXs in the short term because wallet technology has not evolved yet to a point where a new user or even the average user is probably comfortable moving money between external wallets or cold wallets. So there's that. Secondly, there's going to be people like me, I'm in my 40s. I'm probably never going to get comfortable with, doing that. I'll probably always prefer a centralized exchange. And so while, the market is going to continue to grow, perhaps the centralized market will remain somewhat stagnant with a certain sort of demographic, and that's okay. It'll have its role to play. But the future of crypto, the future of blockchain is going to be DeFi. And so I think the market will just naturally sort of gravitate towards that. And I think issues regarding, platforms like ours or Coinbase becoming too big, I don't think will really be an issue, because in the end, it'll be DeFi that reigns supreme.